Hey, it's Mac with PriceActionTradingSystem.com, and it's Monday. It's November 18th. This will be our chart lesson for today. And I'm back at the office today. Had a nice couple of days off there for the weekend, and nice to get a break every now and then, get a little rest, and come back refreshed. So I'm ready to go, and I'm a little behind on emails. I'm just about caught up here by the end of the day. It's late in the afternoon on Monday. But sometime early tomorrow morning, I'll probably be caught up after I finish trading a little bit and get a chance to read some emails. I'll probably be caught up after that. But anyway, let's get to our chart lesson. You can see just an inside bar today. We closed higher. Looks like we had a big down day on Friday. Um, Looks like we even closed below the midline there. But looks like we're bouncing off the midline as of now. This is nothing to write home about. It's obviously it's 5 o'clock. You can see the market just opened right there, and it's so far it's not doing anything. It just opened basically where it closed there. So, um, but we did trade up to today and closed up. It was mostly sideways action, but we had a nice rally that rallied up higher and then just kind of went sideways from there. Nothing spectacular, but there were quite a few setup trades today. So let's flip over to the 2000 tick chart and we'll go through those trades and we'll go from there. But let's flip over to that other chart and take a look at it. And here's our 2000 tick chart. You can see that we had this nice rally. It looked like we were just had a real tight range here at first, but we kind of extended some more. But this is still just a range. Just turned out to be a little bigger than the overnight highs and lows. And we ended up closing somewhere close to the middle of the range, a little bit higher than that. And other than that, this rally here, it was mostly just kind of sideways choppy action. So you had to play these little tight ranges and so forth, other than this trend up here. But this is how I saw it today. You can see there's a few trades in here though. But let's zoom in here. There was no news item today, so nothing as far as news. But let's zoom in here and go through our trades and kind of you got to be patient today. You can see that 7 o'clock came just as we're kind of trending down in here. And if you're new, you might ask, well, why 7 o'clock? That's just where I feel that that's safe to start trading around 7, sometimes 6:30. But I usually try to be in here at 7 if I'm going to trade in the morning. I used to be religious about it. I was in here at 7 o'clock every morning, ready to trade because generally your best trading usually comes in the morning. Now that's not 100%. Today will not be that way, but generally it is that's your best trading is between 7 and 10 a.m. historically, and didn't happen today, but that's the way it is sometimes. But 7 o'clock came just as we're trending down here, and you get this break below the previous low, and prices just reversed. Now this was a retest. Notice you had a trend coming down. We had a break and a move to a new low. And notice we didn't have a retest of the high on the screen when we got that here, and then we came back and we retested these lows a few more times before we went higher. But sometimes you'll get two legs down, two measured legs down, but you clearly had your break here and then two legs down. This was a really big, strong leg. You're way away from the EMA. This is risky, but sometimes these pay off. They end up being the low for the day, and prices sometimes rally off really big. So, you know, I don't recommend these trades for new traders and people that are learning and trying to get profitable. But for somebody that's been trading a while, they can read the chart and they understand what's going on, and have been sim trading a while and proven they can pick these and understand them. Then I mean, it's always risky to pick this. That's why I make it green. But sometimes the risk is worth the reward, especially if you're if you're consistently profitable. It's not that big a deal. But if you're not consistently profitable, it's just probably another big hit you're going to take. So the worst thing you can do is try to pick highs and lows. And this is more of a range, so you're just kind of picking a failed breakout, which is a little higher probability than if it was a strong trend down. But I like this one. It's risky. But you see you get a nice move up, close outside, move to a new high, and it turns down again. I like this on a second entry short, that far away from the EMA. Um, Plus, we had all this resistance here, so prices are likely to come back before they go higher again. So I like this second entry short here. This channel is played out. It's a second entry. It's a very nice signal bar. You're way away from the EMA. Prices are likely to snap back. And in this case, you get a surprise and this thing just takes off. So you could have, if you caught either one of these or both of them, you're probably done for the day. And that's what I'm saying. Why I like trading from 7 o'clock on. Generally, you get your best trading there. This wasn't this morning, but you had two quick, easy trades before 8:30 that probably would have easily given your profit target plus some runners, and you could be done for the day. And that's why I like trading in the morning, those earlier hours. But we run back down, we test the overnight low again and bounce. This is not rejection of prices. You just have to kind of sit tight here. There's a higher low here, but it's a break out of that, and it could come back. So you just have to skip that. Just the first entry here, and then you get your break. It tries to make a new high and doesn't, and turns back down, and it tests this low again. I didn't mark this one because you got this channel working down, and there's no break of it or anything yet. You could argue that maybe there's a triple test, but with this break lower here, I would sit tight and wait on another test just to be sure. And notice you do get your break and move to a new low, and then you're just kind of chopping along. And you clearly get at least a triple test here with a nice signal bar. It is a little congested, so maybe you skip that and see if you get a higher low. And you just don't ever get it, and prices take off again. So if you didn't enter here, you really couldn't enter down here. And the reason this is green is because of exactly what happened here. You break out of the congestion, it comes back, it fails. It's like breaking out of a range. And prices usually always fail, even if only temporarily. And that's what happens here. They break out, fail, come back, and then go higher. Then you get this triple, quadruple test, and then it takes off. The smart traders are waiting to see. It's more of a breakout pullback then, and then you just go into another range. I don't see anything here. This one was tempting. I would call this a double bottom, so this is a first entry, second entry, and it does make a new high, but again, it's a little congested. There's not much room here. You could argue for that one to be green. I didn't like it in real time because you might get two legs back and go higher again. And that's what I was kind of expecting to happen, but it didn't quite happen that way. We just kind of went sideways, and this should be just a tad higher here. Breakout, two legs back, and it bounces again, and you get a nice signal bar that closes well outside. That's a second entry long. I like going long there. You're just trying to get a scalp back to this high, and maybe you catch maybe we're going to continue to trend higher, and that's exactly what happens. We keep trending up. We come back and confirm the trend line here. There's no real setup there. You could argue there's a little bit of not a channel, but a range here. And you might argue there's a little breakout. I just don't think it's real solid there. And maybe you trade that if there's enough room back to the high, but I think you should just skip it and wait. And then you're just chopping along here, and you get a 1, 2, 3, a quadruple test. And it's also a first entry, second entry. And there's not a lot of room to the high here, but it's clearly still playing that trend line. It's a triple test, a second entry long. I like that trade, and it takes off. I mean, you may just get a scalp out of it, but it could take off again, which it does. It takes off, comes back. This is just a first entry. You do get your close outside here. Couple of legs up to a new high, and then it turns down. I wouldn't try picking a top up here because you don't know where this is going to end. You might measure the two legs up, and if they're two measured legs like so, then maybe you risk that, but I just think that's really a risky one right there when such a strong trend. That's not much of two legs up, so it could always give you another move up, and it's just kind of risky. But it is a long way away from the EMA, so if you want to be risky, That's probably one when since it's two measured legs, maybe you do that. And again, it's a really nice trend down. You're better off to wait on a lower high, but it comes down here, and that's too far. That's not a tradable lower high, and it just keeps dropping. So it would have been a nice entry, but I just think it's really risky. Um, you get a close outside in the new low here, but you get two legs back to the EMA and a very bearish bar that's only 5 ticks, very low risk. I think you want to take that trade, and it's a nice easy move. And then you get a bounce here, but I don't think you can go long there. And here you get a breakout and a lower high. This is not an ideal lower high. Uh, it is a lower high that closes back in the range, so maybe you go short there. I marked it green. If it would have broke higher and turned down, you could have traded that on the engulfing bar, and you could have got short a lot quicker, and I would have liked it then. Let me zoom in here a little. I'm sorry. It's not real. I'm way out there, so it's probably hard to see some of this stuff. Um, yeah, I would have liked it better if it broke higher there. Come down here and you get a failed breakout. Again, you could trade this because you do have a close outside in the new low, but I think you need to wait on the higher low. So you could argue for that to be green maybe. The higher low comes here, so if it breaks above that, that's where I'd want to go long, the sure thing. Then of course up here you get a triple test, but the signal bar is not good enough. But then you get a lower high that closes back in the range. I like going short on that one, and that would have turned out to be a nice move for you. You probably wouldn't get a runner or anything there, but quick easy scalp out of it at least. This thing drops, runs all the way back down here, and you can see we're running back down towards the midline of the from if you moved your measurements on the bigger channel up higher. You get a close outside, new low. I'd wait on a higher low here. You can't. There's a signal bar is no good. As long as you got room back to the EMA there, I say go with this one. And this turns out to be a really nice move up, right back into the range. This is too congested. We did try to go higher 3 times, and that's a fairly bearish bar, but it's right at the midline of this original range, and you got congestion there, and I just think it's a bad idea to try to enter there. It turns out to be a nice move down, close outside, move to a new low, and we bounce down here and get a triple test. Unfortunately, the signal bar just doesn't qualify. If it did, that would have been another nice entry. And you can see a lot of people took it anyway and then just run straight up. But we're going to play it by the rules and take sure things, and that's not a sure thing there. So close outside, couple legs up to a new high, and then it shorts. There's a lower high here. Again, it looks a little congested across there. So I'd want at least a triple test here. And you get that here, but it makes a new high. It's at 231, but it's just barely, into the 230 hour. So if you get a good setup, you might take that anyway. It is a second entry. And here you have a little room back to scalp out. Here you're right into the lows, and so I'm a little wary of that one there. And you see you would have got stopped out on it. You would have got a chance to get out with something here when you started getting these next two sideways bars. It was obvious it was congestion. So if you did enter here, take what you can get with your 1 tick or break even or whatever. And maybe you enter this one again. It's at 231, so it's not so far into the 230 hour that you couldn't enter. My rule is don't take anything after 230. But if it's like in the first minute or two of 230 and it's a really good setup, maybe you take it. This was just an okay setup. It is a second entry. You did already have your break and couple of swings up to a new high. It's just a little congested across there, but there's plenty of room back to the midline and the EMA here. So maybe you take that one. Be up to you. And after that, it's too late to take anything else. So back out here. There it is again. You can see it's just a large range, but this was a really nice rally, but there was only a couple of chances to get a piece of it, and sometimes that's the way it is. And most of the rest of this, you were trading triple tests and ranges and things like that. And that's just, and to me, if it's a consistent support and resistance, those ranges and things are It's easy money. It's like but you have to be experienced at it, and you have to get consistent highs and lows. When you get a high and low at a different spot each time, it makes it much harder to trade a range than if they're consistent. Like you can see, most of these highs are consistent, and most of these lows until it breaks lower are consistent. That's easier to trade than um, I mean, here, this one's a little different. It's fairly consistent across there, but notice how that one's lower than these two, and this one's lower than those, and then you get one back inside at the original. And here we break out, and you actually could have moved this one up, and then it's consistent again here. And I think in the end, you could have played it right there, and you get a good many touches right there, and the midline still fits really well. So in the end, I think you should have moved it up there. Um, but either way, you still got a decent setup there with that lower high after a triple test. And the only reason you don't like the triple test there is because the signal bar is no good. Otherwise, you could have said, okay, that's a triple test. I'm going short right there. But it's not a very good setup. So the signal bar doesn't qualify. So there it is. Kind of a quiet Monday. This market continues to, I mean, we corrected a little bit. We've corrected out of the overbought situation. So we relieved some of that. Let's go back and look at the daily chart one more time before we wrap this up. So yes, you can see we were up here well in overbought territory, but we relieved that now. We came back down to the midline of the envelope bands, and we're trying to bounce there, it looks like. Now we could continue lower the midline of the channel here, but we had a break of this and at least two legs up way back. So I think this rally here was mostly election driven. So where we're going to go from here, I just don't know. The market seems to like the election and the results. And my guess is Trump is going to be favorable to corporations and the stock market. So we're overdue for a correction. So we could get some type of correction. Let me zoom out here. I mean, you can see we've been rallying for a long time. And so we're overdue for some type of correction, and maybe we can start a new trend. We'll just have to see. This one did get a break way back here, and at least two legs to a new high, and we turned down right off the high of this original channel I drew here. It was a spiking channel. We had the close here, outside here, I guess I should say. And you can see we've been clearly following that midline down through there, and the upper side and the lower side minus the break here. So we've seen everything we need to see before we have a correction. Now, a correction doesn't mean you're going to turn around and sell off and have to start trending down. Sometimes that will happen. Sometimes you start working sideways for a while. On the daily chart, it would probably last for a few months, a few weeks at least, maybe a couple of months or more. Just working sideways, just kind of consolidating the big move up. We could come back down and test one of these lows first and then start a new trend. You just don't know, but it doesn't. So a break in a new high doesn't mean the trend is completely. Let me rephrase that. A break in a new high doesn't mean you're all of a sudden going to reverse and trend lower. It could, but it could just mean we're going to consolidate for a while, or even just have a nice two-legged correction where you start another trend up. So just keep that in mind. I guess what I'm trying to say is it doesn't necessarily mean we're going to start trending, get a huge sell-off and get a huge trend down. Now we could, but I'm not saying, but that doesn't necessarily mean that's what's going to happen. So make sure you understand that. I hope that's clear. Sometimes people think that break and new high retest means you're just going to reverse and start trending down, and that's not necessarily the case. So keep that in mind. Anyway, I think that's going to do it for today. I'm going to wrap it up. We'll look forward to a full week this week. I'll be back tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.